last Tuesday, they held a press conference about the stimulus package, which, as you mentioned, is the
defibrillator.
Yeah, that kind of imagery. But it didn't really have that impact. What actually happened? I don't think the patient is resuscitated.
So they basically, so they did it. They did a number of things. They had a press conference. They talked about numbers and stuff like that. And there are a couple of things that I think have come out over the past in recent history. One of them is there is this official almost obsession with the stock market. So they released numerous financing mechanisms and different regulatory mechanisms to allow greater investment in the stock market. Okay. And to be honest, I think I don't have a good grasp as to why Chinese officials seem so obsessed with the stock market. Okay. And I say that only because, the stock market is almost irrelevant to the backdrop of all the larger macroeconomic problems that are all around. Okay. But they definitely seem more obsessed with that. And so heading into the October holidays, the stock market had jumped rather significantly, and it started drifting back downwards, and I would expect it to continue drifting back downwards. I saw somebody yesterday, and I haven't checked this data myself, message me that most of the buying in the Chinese stock market the past couple of days has been on margin. And margin is basically when people borrow money to buy stocks. Okay. And so that's rather concerning. First of all, as to why they would even be so obsessed with the stock market. The other things that we're seeing in the stimulus go to things that are like patching up, and like one of them is supposedly one of the largest dollar items that is announced. We still have yet to see details, but is about $150 billion intended to recapitalize banks. And banks in China are in very bad shape. Lots of small and medium-sized banks have been basically folded in to the larger banks. And when I say large, there's basically, I want to say about 5 banks in China probably hold about 70% market share. And then there's thousands of, enormous number of small city, county, and provincial level banks. And so as those smaller and mid-sized banks, which are quite honestly probably bankrupt, we don't know for sure, but the way they're acting and being rolled in makes it seem most likely that they are bankrupt. They're being folded into small ones. Part of the reason that they probably need to be recapitalized is that this is creating significant holes in the balance sheets of these larger banks. The problem is that the Chinese banking sector probably has today, I would put it at about probably $36 trillion in bank loans outstanding. And just to put that number in perspective, they're doing a recapitalization that is equal to $150 billion. Okay. So you have a $36 trillion bank loan with $150 billion recapitalization. And I can kind of see your eyes on the screen.
So that's like less than half of 1%.
Yes, it's a tiny number. I mean, it is. I mean, it's like putting a strip of duct tape on the Titanic.
But what if the duct tape is placed strategically?
By the technocrats, these brilliant meritocracy that they have.
So one of the reasons this matters, there's a couple reasons this matters. One of the ideas is that people are talking about how this is going to allow the Chinese banking sector to stimulate lending. And so banks being recapitalized, they're going to go out and drive lending. Okay, they're going to push a lot of money out into the market. Like $150 billion against a $36 trillion banking sector is, I mean, it's as you pointed out, it's basically a rounding. Okay, I mean, it's nothing more than a rounding.
Well, why don't they do more? Why are these the decisions they're making?
So I think I think the reason that they're making that specific decision on banks, as you said, well, what if it's strategically placed duct tape? This is not, that amount of money is not intended to stimulate lending. Okay, to say we're gonna really push lending to push investment in economic activity. That money is intended to make sure that there aren't significant problems. Okay, that the boat can keep floating for a while longer. It may still be taking on water, but it's not going to fall into the ocean tomorrow. Okay, so we need to think of it. If it's intended to stimulate lending, that number doesn't matter. If it's intended to keep the banks afloat, yeah, that number can probably work.
So I have a question about debt. And, I recognize that all modern economies basically run on debt, some to larger degrees than others. The U.S. economy, the U.S. currency is backed by debt. So this is kind of the economic system we're used to. But if China has an outsized problem with existing debt, like there's just way too much debt, does it make sense to try to fix the problem by issuing more debt to fix the debt problem? Or are there other ways that are not other potential solutions that aren't don't require not more debt? Is there a way to fix the debt problem without issuing more debt to fix the debt?
Yes, but nobody wants to discuss that. And let me
we want to discuss that. Chris and I want to discuss that. That's why we have you here.
So think about it this way. Whether it's the United States, whether it's China, it doesn't matter, okay? When you go out and get a loan, okay, think about, going and getting a mortgage, okay? What the bank is looking at is what stream of income do you have to repay that loan, okay? What stream of income do you have? Because that's how the bank gets repaid. The bank accepts your money in exchange for giving you money to buy something bigger right now that you wouldn't be able to buy otherwise. Okay? And the same concept applies for high-speed rail, bridges in China, whatever you want to talk about. Okay? There's going to be a future stream of income that is going to pay back that debt. Okay? So let's take high-speed rail as a great example. High-speed rail takes on an enormous amount of debt. I don't know what the number is today, but I know at one point in time, the debt for Chinese high-speed rail was equal to roughly 10% of GDP. Okay. Now, high-speed rail gets money by what? They get money by selling tickets. Okay. So here's the question. Okay. If that's how debt is repaid by doing things like selling tickets or tolls across the bridge, here's the question. What happens if the debt that was used to build that high-speed rail system can't sell enough tickets or get enough riders to generate revenue to pay back that debt?
Oh, easy. They just take out another line of credit and use that money to pay off the previous debt.
So here's the real problem. Let's put it this way. That is what China is doing, and that is what China is hoping. Okay? And let me back up and give a history lesson. Back in, say, 2004 to 6, China did a major recapitalization of all its banks. Okay? Major banks. Okay? And I forget the numbers. I forget the exact numbers off the top of my head, but it was almost equal to about 50% of GDP.
But what does a recapitalization of banks mean?
So recapitalization of banks means that the banks have made a bunch of bad loans. They have to write the value of those loans down significantly. So let's assume. Let me give you an example. Let's assume that I loan you $100,000 to buy an apartment in China, and it comes out that you've lost your job, but you can sell it to somebody but the most you can get for selling your apartment is $25,000. Okay, I write the value of my loan to you down from $100,000 to $25,000. Okay, and you sell your apartment for $25,000 and give me that $25,000. Okay, so the value of that loan has decreased by 75%. Okay, and so I, as a bank, lose a lot of money. Okay, that's what we mean by write down. Okay, think of it. So when the Chinese banks did, when the Chinese government did a big recapitalization in 2004, 2006, and I forget the exact numbers, but I want to say it was around like 50% of GDP. I mean, it was an enormous sum of money for China at the time. What happened is they didn't actually clean those things up. Okay, and what I mean by that is typically what you would do is you would say, okay, you sell your apartment for $25,000. We've reset the value. Okay, I, as a bank, have recognized that apartment is now only worth $25,000. You sell your apartment, I get the $25,000. My balance sheet as a bank is now clean because that asset has been moved, has been sold. Does that make sense?
Right.
Okay. So, but what happened was in China in 2005 is most of those assets were not actually disposed of from the bank balance sheets. Okay. What happened is the banks would typically enter into a variety of arrangements to move them technically off of their balance sheets, but not really off of their balance sheets.